Worldwide markets this week, rare earth minerals, not so rare, but worth a look. Gold, looks like we're finally getting that pullback. 5 years since negative oil, IMF forecasts all going down. This is Worldwide Markets, episode 627 for 23 April, recorded just ahead of market open. And I am, of course, Simon Brown. Worldwide Markets, powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest forex rates. Let's start with that gold price. We had gold up at $3,500 on Tuesday morning. That was the futures price, just ahead of 3,500. It has subsequently pulled back a whole bunch. Now, it got there because of statements from Trump and Powell. On Powell, we'll talk around that in a second. But really what this was a huge run. Now, you remember, was it last week before, I spoke around Goldman Sachs saying that they thought that gold could potentially get to 4,500, and well, we were $1,000 short. Since then, we have seen a fairly significant pullback, and that all happened on the same day, on Tuesday. Gold now trading 3,321. Couple of things. I've been saying for a while that surely at some point we get some level of pullback. We had that sort of consolidation late Feb, early March, sub $300. Since then, it has almost just been one-way traffic. What we're seeing on the weekly chart is essentially what could be a kangaroo tail forming, which is a reversal pattern. And certainly it depends where we close on Friday. That's going to be the biggie because this is a weekly chart. But it does look like we're going to get that pullback. The zone to me is just under $3,000, maybe down as low as 28.30 or there's about. It's not a terrible thing. We need prices to sort of come back from time to time. Those who think that they have missed the opportunity, you're getting a second chance to get into the yellow metal. As I say, I do think we will see it going further lower. And as I said, it was initially sparked by comments from President Trump around Jerome Powell saying that he needed to cut and cut aggressively, that inflation was down and eggs were down and everything was coming down in terms of pricing, and that Jerome Powell and the Federal Reserve was behind the curve. Behind the curve, my words, not his, but basically too late. Now, there were also reports that he was investigating if he could fire Jerome Powell. He can't. He ironically appointed him 7 years ago. His second appointment was confirmed by then President Biden. Powell's term ends in May of next year. Technically, he can't be fired. He could be kicked out for gross misconduct and the like. That would probably take more than the year between now and his term ending. Now, Trump has now walked this back and saying he loves Jerome Powell. All is good. In essence, what he's doing, I suspect, is getting a fall guy, so that when things go horrid, he's got someone that he can point to and say, you see, it's all his fault in that regard. And I think that is really where it's coming from. And things are going horrid. We had IMF coming out on Tuesday. Back at the beginning of the year, they were talking around 3% GDP for this year. They're now taking it down to 2.8%. It's not a biggie, 0.2%. It is, of course, moving the wrong direction, and they're looking at 3% for next year. So it was forecast to 3.2 and 3.3, now down to 2.8 and 3. So down 0.4%. It's the trend that matters. Of course, locally, we got told that we're going to get 1%, according to the IMF, for this year, 1.3 for next year. Problem with that is National Treasury is looking for 1.9%. So if we only get 1% GDP instead of 1.9 this year, National Treasury, on a simple basis, has a fairly chunky hole that they need to now fill in their budget. And forget 0.5% VAT increases, whatever. I mean, that 0.5% is 13 billion. Judge Dennis Davies was saying, in a 2 trillion rand budget, really 13.5 billion. I mean, you can't just find that under a couch somewhere. Pun intended. You just got to, I suppose, find the right couch. So what we're seeing is a slowdown thanks entirely to the fun and games coming out of the White House at the moment. We're still on our 90-day pause period. We'll see how that goes. They promised to sign 90 deals in 90 days. Thus far, we have had 0. I don't know how you negotiate bilateral trade agreements in 90 days. According to reports, the Japanese who flew into US are saying there's just no consistency. One meeting they want this, next they want that, and you need some level of certainty. That is the problem in this Trump White House, is the lack of certainty. And we've also had Trump, in a sense, walking back China. Now, it's still the 145%, but he's like, no, we'll make a deal. Everything will be fine. So, I mean, short answer, yeah, stuff is, I think what we say in the business, things are messy. We've got bookings open for our next Standard Bank Power Hour, which is on the 15th of May, 5:30 p.m. This, of course, at the Standard Bank head office in Rosebank, Johannesburg, or via webcast. Last year, we looked at trading as a side hustle, and this year we're taking it a step further, looking at the various derivatives, contract for difference, futures, which is index, commodity, and currency. We'll also look at warrants and options. How do they work? What are the differences? And what do you need to know? justonelap.com/events. For more information and booking. So I went down the rabbit hole of rare earths, and I'm not going to try and pronounce any of their names. And the reason is because there was all the worries and fears. China is restricting exports of rare earths. They are responsible for a big chunk of it. The first point is that rare earths are not that rare. They're actually fairly popular. They're just hard to extract. In many cases, the concentration levels of the rare earths is just not sufficient for technology to get them out of the rest of, I suppose, non-rare earth. There are a number of companies around the world involved in rare earths, a couple in Australia. There's some New York and Canadian listed as well. And I started going down rabbit holes of individual companies, but I'll get to that in a moment because there's ETFs. The key point right now is, as I said, it's that logistical challenge. And China's really spent on it. So they account for 69% of rare earth production in 2023. That was the latest data I could find. And processed nearly 90% of the world's rare earth elements. And that's the key point, is that they are the player in it. It's not because they have it, it's because they are working on it. And that's what's hugely important. Of course, with concerns around China, then suddenly it's a case of, well, maybe we should be looking for something else instead. And that's not other supplies, other places where we can get it from. And as I said, I was going through rabbit holes left, right, and center. And it was, I wasn't particularly, there's too many companies, and I haven't got time or inclination or ability to go and look at 10 or 15. In many cases, fairly small companies, some larger. There's a fairly big one, couple of big ones in the US and Australia. But I did find an ETF that covers it. And typically, I like the ETF in this sort of environment. It's a much better and a much simpler sort of concept in terms of where are we, what are we doing, and getting into a space without having to know all of the exact nuances around it. We can just say, we like the theme. Let's take a thematic investment. So this is the VanEck ETF Trust, Rare Earth and Strategic Metals, as they are calling it. And it's come from 130 down to 37. It's been a fair bit of a horror ride for the ETF, although it has been even higher back just after listing around 2010. It was trading up at 240, and it is moderately off the lows. At this point, it has, maybe there's some support around that 35. The key thing with it is it wants to find companies that are 50% generating revenue from rare earth minerals. And I think that is perhaps the important point. They've got a total expense ratio of a little under, I think it's around 0.5%. It is 29 holdings. Biggest holdings is Linus Rare Earths at 7.7, China Northern Rare Earth at 7.7, and then one I can't even begin to pronounce from out of Chile at about 7.3%. So nothing too overly concentrated. There is a dividend yield of around 2.6%, which is actually a fairly chunky. Code is REMX, and it trades in New York. To me, I get the point around rare earths. I certainly get the attractions. Certainly this ETF is trading at a price to book of around 1.5, which is not particularly expensive. I just, the trick with thematic, and that's always going to be the management fee, total expense ratio 0.56. I knew it was somewhere. The problem with thematic is you got three issues you got to get. You got to first pick the theme, then you got to decide when you're buying it, and then you got to decide when you're selling it. And those three are difficult. Truthfully, very difficult to get all three of those decisions right. Is rare earth something that is going to be a big part of our future? Yeah. They're just, as I say, not that rare. They're also everywhere. We think they're about our mobile phones and stuff, and they are. They're also in your vacuum cleaners. They're also in batteries. So I do think that rare earths are important. I do think there is a challenge with China controlling 69% of supply and 90% of production. That certainly is a problem. But I got to say, this is not an ETF which I'm looking at and thinking, I need to own this, because without it, there is just, there's just no point. I think, yes, rare earths important. But to me, I'm not convinced about what I'm seeing with regards to the viability and desire to actually want to potentially hold rare earth. So for me, it's a thanks, but no thanks. But another fun fact, this Monday just passed was 5 years since oil went negative, which I got to say remains one of the craziest things I ever saw. I remember at the time, it was 21 April 2020. We were, of course, in deep, dark lockdown. I hadn't even, my MoneyWeb show only started about on the 4th of May, so call it 2 weeks later. And what happened is, and this was only the West Texas crude oil. This wasn't others. And that's because in Cushing's down in Texas, where it settles, this West Texas intermediate crude oil is physically settled. Most futures contracts are cash settled. In other words, at the end of the period, you don't need to actually deliver whatever that futures contract was over. Maize, whatever the case may be. Now, in the case of maize, probably there is a farmer who's got 100 tons of maize and there's a miller who needs it. But in the case of West Texas Intermediate, it is physically settled. In other words, if you are long barrels of oil, you are going to have to receive them. And traders know that, and there's lots of space down in Cushing's, Texas. The problem is there wasn't enough capacity. There was too many people who had bought far too much oil, and then they couldn't find storage. So they're going to have all these barrels coming, and where are they going to put it? Hence, they started selling aggressively, and they pushed it into negative. Now, I didn't know that products could go negative, but what they were basically saying is, we will pay you to take this barrel of oil off our hands. You don't pay us, no, don't worry about it. We'll pay you because we don't have storage, and we don't think that you have storage either. You can see on the chart, you will see it. So not all charts reflect it, because some just simply can't. They're just not geared for minus numbers. Went as low as minus $40.32 per barrel, got back very quickly. It was trading within $16 later that week, so it recovered in absolute double quick time. And the question is, did some folks make money? Absolutely, some folks made money, but it was a scary trade. So you could have bought it at 40, but if capacity didn't come online, were you going to be able to sell it at a higher price, or were you going to pay somebody to take that oil off your hands? So negative oil price remains, as I say, one of absolutely the craziest things I've ever seen. And then a stock that we have covered before on this show, Contemporary Amperex Technologies. They are battery makers coming out of China, and they've got a new sodium-ion battery brand that they are launching. There was a story on Tech Central. You will find it there. The key thing with sodium, instead of lithium-ion, sodium-ion, it is cheaper, it is less flammable, and it's almost giving energy density that you get from the traditional lithium-ion battery. These are the ones that can also charge very quickly. At this point, you don't get the range because of that lower energy density, but what you do get, instead of the range, is you get that ability to charge quickly, which is perhaps even better. It is profitable. It is even dividend paying. The problem is it's listed in Shenzhen, China. And I just don't know. I mean, I am sure there are some brokers out there who can get me exposure to Shenzhen. I have no doubt about that. It's just not something on my radar. It's not something that I'm particularly looking for. There are a lot of analysts covering it. 25 say buy, 9 say strong buy. Low target price is 208. Current is 230. Average is 331 and high is 413. I like everything about this company. You go have a look at their website. It really is an impressive looking product range. The chart itself is not a bad looking chart. It has broken some support and at the sort of 233, 238 level and has been tracking lower. We'll see how that manages to hold. It's just, as I say, how do I buy it? And that's what stresses me in that regard. I don't know quite how. Shenzhen, I mean, it's a legitimate company. The code is 300750 for those who do have access to Shenzhen markets. And maybe more than anything, I need to go and dig and discover, well, how do I get exposure to Shenzhen? Because this is not going to be the last. There are going to be others out there that we look at and think maybe there's actually something here which is worth having a look at in terms of investing and opportunity. Worldwide markets powered by Standard Bank Global Markets and Shift, the Global Money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. We're parking it there for this week, a slightly shorter show. News flows. So I wanted to touch on Aspen. But so Aspen had an announcement saying there was a 2 billion rand hit that they were taking due to a contract dispute. We don't have any details. There was, whilst I was recording a webcast ongoing, we'll get details of that later. At this point in time, we don't know much except that 2 billion is nasty. The problem with Aspen and management, I think, is really all about trust. I think in many cases they have lost that trust. So we'll park it there. My name is Simon. We'll chat again next week. Notwithstanding all the public holidays, enjoy the short weeks, enjoy the long weekends. And as always, look after yourself. If you can, look after somebody else as well. Cheers all.